Hello everyone, welcome to GBR College video lecture series. In this video, I am going to discuss the International Accounting Standard 34, that is Interim Financial Reporting for MCOM second semester students. Now I am going to discuss the overview of IAS 34. See, IAS 34, that is Interim Financial Reporting, applies when an entity prepares an interim financial report. Okay, so it is applied for whom an entity prepares an interim financial report without mandating when an entity should prepare such a report. And it's permitting less information to be reported than in annual financial statements on the basis of providing an update to those financial statements. This standard, the IAS 34, that is outlines the recognition, measurement and disclosure requirements for interim reports. Okay. And IAS 34 was issued in the year of 1998, June. Okay, and it is operative for the period beginning on or after 1st January 1999. Okay, so it was issued in the year of 1998 and it is operative on or after 1st January 1999. Okay, yes, next, what is the objective of IAS 34? Okay, so this objective, so the objective of IAS 34 is to what? Prescribe the minimum content of an interim financial report and to prescribe the principles for recognition and measurement in financial statements presented for an interim period. Okay, so this standards is to prescribe the minimum content of an interim financial report. Okay, what is the minimum content of interim financial report, and also to prescribe the principles for recognition and measurement in financial statements presented for an interim period. Okay, yes, next, that is key definitions. Yes, interim period, what it means. In interim period, a financial reporting period shorter than a full financial year. Okay, so interim period means what? That is a financial reporting period. Okay, shorter than a full financial year, most typically a quarter or half year. Okay, so interim financial report which is prepared quarterly or half yearly. Okay, so next, what is the meaning of interim financial report? Okay, what it is? A financial report that contains either a complete or condensed set of financial statements for an interim period. Okay, so interim financial report means what? A financial report. It's also one of the financial report that contains either a complete or condensed set of financial statements for an interim period. Okay, so next, that is, what are the minimum content of an interim financial report? What are the minimum contents of an interim financial report? See this, the minimum components specified for an interim financial report are, so first one, a condensed balance sheet, or it is also called as statement of financial position. Okay, so what it means, the statement, a condensed set of financial statements or financial position. So it includes the condensed primary statements, that is financial position, comprehensive income, equity and cash flow, and also the selected explanatory notes. What is the next content or component? That is a condensed statement of comprehensive income. So what it is? A comprehensive income. It is produced for the current interim period. For the current interim period, and also the cumulative for the current financial year to date with comparatives for the comparable interim periods of the prior financial year. Okay. An entity that publishes interim financial reports quarterly would, for example, prepare 4 statements of comprehensive income in its third quarter. Okay, so one of the 9 months cumulatively since the beginning of the year, one for the third quarter only, and comparative statements of comprehensive income for the exact comparable periods of the prior financial year. Okay, so next, a condensed statement of changes in equity. It is also one of the component specified for an interim financial report. What it is? Statement of changes in equity. It is cumulative for the current financial year to date and comparative for the comparable interim period of the prior financial year. Okay, so next, a condensed statement of cash flow. Okay, so condensed statement of cash flow is a cumulative statement. It's also one of the cumulative statement for the current financial year to date and comparative statement for the comparable interim period of the prior financial year. Okay, see, and also selected explanatory notes are specified for an interim financial report. Okay, so next, accounting policies. Yes, accounting policies. See, what are the accounting policies relating to this standard? Accounting policies. The same accounting policies should be applied for interim reporting as or applied in the entity's annual financial statements. Okay, so what are the accounting policies are to be used for preparation of annual financial statements? So same the accounting policies should be applied for the preparation of interim reporting also, except for accounting policy changes made after the date of the most recent annual financial statements that are to be reflected in the next annual financial statement. Okay, so the same accounting policies. So when the company is preparing the financial statement, that is annual financial statements, so those policies, accounting policies, are also applied for preparation of interim reporting, except what? For accounting policy changes made after the date of the most recent annual financial statement that are to be reflected in the next annual financial statements. Okay, so a key provision of IAS 34 is that an entity should use the same accounting policy throughout a single financial year. Okay, this is a key provision of IAS 34. Keep in your mind, it's that an entity should use the same accounting policy throughout a single financial year. If a decision is made to change a policy mid-year, the change is implemented retrospectively, and previously reported interim data is restated. It is to be restated. Okay, if is there any if any decision is made in the mid-year, so the change must be implemented retrospectively, and also previously reported interim data is restated. Okay, so next, what is the measurement regarding this IAS 34? See, several important measurement points are there. Keep in your mind. First, revenues that are received seasonally, cyclically, or occasionally. within a financial year should not be anticipated or deferred as of the interim date. If anticipation or deferral would not be appropriate at the end of the financial year. Okay, so revenues that are received seasonally, cyclically, or occasionally within a financial year should not be anticipated or deferred as of the interim date. If the anticipation or deferral would not be appropriate at the end of the financial year, and costs that are incurred unevenly during a financial year should be anticipated or deferred for interim reporting purpose if and only if it is also appropriate to anticipate or defer that type of cost at the end of the financial year. Okay, so income tax expense should be recognized based on the best estimate of the weighted average annual effective income tax rate expected for the full financial year. Okay, see, the frequency of interim reporting does not affect the measurement of an entity's annual results. Measurements for interim reporting purposes are therefore made on a year to date basis. So this is called as a discrete method. Okay, so measurements in both annual and interim financial reports are often based on reasonable estimates, but the preparation of interim financial reports generally will require a greater use of estimation methods than annual financial reports. Okay, so for example, full stock talking and valuation procedures cannot be realistically carried out for inventories at interim dates. Okay, for interim reporting purposes, use need not to be made of professional qualified valuers. Estimates can be obtained by previous annual report of figures where there are reliable and where is feasible. Okay, see, what are the disclosures in annual financial statements? In deciding how to recognize, measure, classify and disclose the items in the interim report, materiality must be taken into consideration. Okay, so in deciding how to recognize, how to measure, how to classify and disclose the items in the interim reports, so materiality must be taken into consideration. In assessing the materiality to be applied, reliance must be placed on estimates used for interim reporting and not an annual results. Okay, see, disclosures in annual financial statements. If an estimate of an amount reported in an interim period is changed significantly during the financial interim period in the financial year, but a separate financial report is not published for the period, the nature and amount of that change must be disclosed in the notes to the annual financial statements. Okay, see, if an estimate of an amount reported in an interim period is changed significantly during the financial interim period in the financial year, but a separate financial report is not published for the period, the nature and that amount change must be disclosed in the notes. So that is explanatory notes, selected explanatory notes. Okay, disclosed in the notes to the annual financial statements. Okay, see, this is all about regarding the IAS 34. In this video, we should know that overview. Okay, overview of IAS 34 and what is the objective of IAS 34 and what are the key definitions regarding this standard and what are the minimum contents of an interim financial report and what are the accounting policies and what is the what are the measurements are to be required, and what are the disclosures in annual financial statements. Okay, see, the when adopting a new standard or amendment, the new requirements are applicable to the first interim period after the effective date. When adopting a new standard, okay, so or amendment, the new requirements are applicable to the first interim period after the effective date. The condensed annual financial statements for the interim period and the comparative information therefore have to meet the new requirements. Okay, so entities that issue interim results are therefore effectively required. Okay, so this is all about this IAS 34. Thank you for watching. I hope you understand. Once again, thank you.